Hey everybody, it's Erik Torenberg, co-founder, partner of Village Global, a network-driven venture firm. And this is Venture Stories, a podcast covering topics relating to tech and business with world-leading experts. Hey everybody, welcome to another episode of Venture Stories by Village Global. I'm here today with the very special guest, Turner Novak. Turner is a partner at Gelt. Turner, welcome to the podcast.
Thanks for having me.
So before we were talking about this podcast, we were talking about SoftBank, and we were talking about why you think maybe in some ways it's more interesting or more of a fit for mega LPs than people give it credit for. Why don't you unpack that argument a little bit?
Yeah, so when I think about I'm a mega LP, I've got hundreds of billions of dollars, $1 trillion portfolio. I can't go out, like if I want to get exposure to venture or anything in the private markets, I can't go and just write a check for $10 billion. Like that's just it's not possible right now. And I'm not saying this so we don't know if it's actually going to work. That's still TBD. But if let's say I have a $100 billion portfolio, I can't go and write 1,000 checks to these small venture managers for $1 million each, $5 million each. Like I just can't do that. I don't have the capacity. My team is constrained. It's just like with any other business. Yeah. So you got to think of, okay, how do I deploy my portfolio as an LP? So thinking like an institutional LP, you have some equities, some stocks, you have some fixed income bonds, you've got some real estate, some venture capital, you've got some private equity. You've got you in most cases they give that money, they split it up and give it to other managers. Like that's where VCs get their money from, is these massive funds. And if I don't have the time I have to be strategic just about how if you're a VC, you can only invest in like 20 companies, 40 companies, whatever. You can't go invest in every single startup. So if I'm a mega LP, I have to kind of pick and choose how I deploy my capital efficiently. I don't have time to go through tons of docs, legal things for every single manager. I don't have time to go all their LP meetings, listen to all their conference calls. Like it's just not possible. So if somebody can come to me and say, I don't even know what SoftBank's saying their returns are right now on the Vision Fund, but it was something like 29%. That's probably wrong, but it was an insane number. If they can say, I'll give you 29% on $40 billion, like that's
very efficient.
Pretty insane. Yeah, like I'm like, okay, I'm interested. And obviously they need to prove out that you can actually do that and get those returns. It's TBD right now.
Yeah.
And I think there's ways to do it. I mean, they've made some of their bets, some of the smaller, less high profile investments. I mean, I think they've done pretty well. So yeah, I mean, it's really fascinating because you probably, like, if you think of, they really just need to kind of pick off the big companies before they IPO. And instead of a company going public, like say Twilio, go public 10x, SoftBank just needs to capture that before they go public. And there's different styles to do that. You know, they're investing in different sectors. You need to have founders and companies and other investors know that you're capable of doing this. Everyone knows SoftBank's capable of writing $1 billion checks now. Like literally everyone knows they exist. Right. So great marketing for them. So I don't think it's that crazy to think like this type of vehicle could exist. Yeah. Obviously there's a lot of nuances to how they've chosen to run things and operate things. You could say they could, fix some things operationally there. But I think the idea of just somebody who is this massive pool of private capital isn't as crazy as people make it sound.
And you come from the LP world. Now you were doing fantasy VC on the side, and we actually did Dark Store together in your fantasy VC portfolio. And you're now full-time VC, but you come from the LP world, so you understand it. And I've wondered if the same misalignments that face VCs and founders are also between VCs and LPs, which is one, similarly, VCs don't have time to scour the universe, so they get scouts to do. And then also VCs need founders to go big because they're playing a portfolio theory. And LPs, aren't interested in lifestyle VCs. They're interested in VCs going big or go home.
Yeah, they want to be able to, a lot of times when, let's say an LP takes a bet on a smaller manager, they invest $5 million or $10 million on your $100 million fund. They expect that relationship to last. Most LPs, especially institutional LPs, they expect their relationship to last for many funds. I mean, like I said, it's you have to be efficient. You can't be wasting time just always writing. It's not like a not like a venture portfolio where you just keep making all these little bets. Like you have to be right too.
Yeah.
In a lot of these institutional LPs, let's say it's an endowment, it's a foundation for a nonprofit, you're a pension plan, you pay out, I don't know, 5% of your portfolio every year. So you have to structure and invest your portfolio low, in some cases, low risk parts of it, where you can guarantee if there's a downturn, you'll have money to like fund the hospital or continue like letting students go to your school. But at the same time, you have to find pockets where, okay, I can get 20% here on this slice of capital and kind of blend it all, where our portfolio grows a little bit every year, said and done, with all the inflation, payouts, and then our returns.
Yeah.
So it's a really interesting like puzzle that you're trying to put together as an institutional LP.
And it's interesting because, I mean, basically the misalignment between founders and VCs is really between, like, it stems from the VC LP. Like, it also, the money starts, I guess, with the LPs. I wonder how the LP ecosystem is going to change in the next few years. I'm curious for your perspective. Like, could you imagine a world in which founders go directly to LPs and LPs hire GPs on staff? Or, like, is there anything that could change in the next 5 to 10 years in the LP ecosystem and the structure of it that would materially change the relationship between founders and VCs and how founders raise capital? Or do you think it's unlikely given how, set in their ways LPs are?
Yeah, I mean, I think we're kind of seeing it a little bit, especially later stages. So some of it comes down to the time thing. If I'm an LP, maybe I have people on my team that do direct investing. You kind of have to establish a brand of some kind as a venture firm or as a partner that kind of brings entrepreneurs to you or helps you find the right things to invest in. They'd have to really restructure their DNA of, like, we're a pension plan, but we're investing in high tech risky startups. Yeah. At the same time, I mean, I think as an LP, let's say an LP invested in Theranos or WeWork or something directly that blew up.
Right.
Let's say you're the teacher's retirement plan of Louisiana. You have a $50 billion portfolio. All your teachers see this in the news, like, our retirement funds invested in this like fraud of a company.
Right. So the middleman is in some ways like optics prevention. Like,
yeah, a little bit.
You get upside if Theranos if it works, and you don't get the brand downside if it totally
Yeah, and there are some I think some of the big Canadian pension plans are getting into buying infrastructure directly. Like, they'll buy an airport or they'll buy like a toll road. You can deploy $5 billion and buy an airport instead of committing it to a fund. And that's kind of a play on, like, they need to find things that they can efficiently deploy massive amounts of capital. That's kind of why hedge funds exist. It's why you see people who are expert stock pickers, index funds have kind of started replacing it. But, like, a lot of endowments, for their public equity exposure, they'll just have like $10 billion in an S&P index fund. Yeah. And it's kind of normal. Not all of them do it yet, but you find ways to efficiently allocate your time. So you have a bunch in an index fund in public equities, which allows you to spend more time and resources finding these special upcoming managers that will be efficient to create a 40-year, 4-fund life cycle, whatever relationship with, that will return a lot of capital to your portfolio.
Do you have any predictions on how the venture asset class will change in the next decade, perhaps sparked by how the LP ecosystem could influence it? Or
I mean, I think one way that we've seen things change, so we've seen people who want to have more control over their destiny start really small funds to get more better economics on their end. So you've seen this fragmentation. And like I said, that kind of plays into massive LPs not being able to write checks. So things that kind of play on smaller venture funds proliferating, that's kind of interesting. Like, I don't think LPs will go direct super early. You'll see it more in growth probably. Those are probably the two things. I mean, I try not to make too many crazy predictions because it'll be wrong. Right?
Totally.
Like,
do you think the SoftBank, let's go back to SoftBank. Are there any bets that you looked at SoftBank made and you said, hey, this makes no sense, or I wouldn't have made, like, maybe WeWork is easy in retrospect to shit on, but like, what do you, and then Ben Thompson has spoken, neither new nor, like, how do you think about these sort of businesses that are not exactly tech businesses? Your partner is in real estate, obviously, at Gelt. How do you think about WeWork or some of these bets they've made?
Yeah, honestly, I mean, I think Uber, WeWork, they are tech businesses. Like, you think, so kind of getting into WeWork a little bit.
They are, aren't?
They are. I mean, they're using technology. So the way WeWork works, the way real estate works, you have fixed costs, you lock them in forever. You also have corresponding revenue that comes in that you lock in for a long time, and you get like 10% margins or whatever. WeWork comes in and maybe goes a little bit above market on the expenses, but it's just like, hey, we're going to slice up this revenue and we're going to increase the revenue we can generate on this property by like 40%. Obviously, you can say, okay, but the revenue can leave really fast. So WeWork's expertise has to be leasing up and like acquiring customers and users, like be in their property. And that's not in the DNA of a real estate firm. Like real estate's extremely fragmented. It's old school. These people just sign 20-year leases, like super late. I don't want to say, some of them just aren't as high performance, efficient as WeWork is. So WeWork's expertise is they can just make more revenue on the same piece of real estate as any other real estate investor could. And they can only do that because of their DNA of acquiring customers really fast. And that's leasing up new properties. It's like using their brand and ethos, like suck people in. It's like acquiring ads, like a real estate manager, like a guy who just owns some real estate in New York, or like the Saudi royal family like owns some real estate around. Like they don't know how to do that, and they won't do that.
So we work at $8 billion. Are you long or short?
Well, let's say so. Masa has known everything going on inside WeWork and known the numbers for a while, and he's been trying to get majority control for a while. Like he tried to get majority control when that deal kind of fell through last year. A lot of it was just secondary and them buying people out, but they couldn't convince their LPs to let them do it. And now he gets the whole thing at $7 billion and probably got really good terms. So I don't know. I'd rather own it now than like a year ago for sure. I think that the product is great. I mean, person using real estate, you don't have to worry about all the other things and operational complexities. Yeah, you can just be like, I'm just going to be a VC and run my firm, or I'm going to be a founder, just run my company that's related to, ag tech, or my company related, it's like a social commerce startup or whatever. Like I don't have to worry about real estate. It's just, it saves you so much time, and you pay a little bit more, but it's probably worth it. Yeah. I'd really be curious how much business value has been created from WeWork. Like how many businesses, billion-dollar businesses, like were founded and are probably still in WeWorks. I don't know. It'd be really interesting to see if anybody
WeWork as a platform in some sense. How do you who do you want rather be long term, WeWork or Uber? Because the thing I'm curious with Uber, I'm curious why Google that has why sort of ride sharing wasn't started by, or why Google doesn't have the advantage, or Apple, in terms of like the maps as the first place that you go and then get a ride from there. Like why it's a separate app, and long term whether that's sustainable. How do you think about that?
Yeah, I think the secret, like WeWork's secret sauce through DNA, is just hyper efficiently matching things up to be picked up and moved around really quickly, and they have tons of liquidity in that marketplace they've created, and that's a certain DNA that, and their business model, the Google Maps business model, is about showing ads on the map. Taking a trip and writing things around is a little bit different. Google's an advertising company. Uber is a transportation company. I really think of Uber's core DNA is just moving things around. I think Dara said, we're the AWS for transportation. So not only on the consumer side, unbundling the car. I don't need to own a car. I can take micromobility. I can take an Uber, whatever. I can take Uber helicopter whenever that comes, probably plane soon. Like there's tons of stuff they can do. But even on the enterprise side, like Uber Freight, it's hyper efficient, bringing things back and forth. Even last mile delivery, like Uber Eats, is really just the last mile logistics network for restaurants. But you're seeing all these last mile, or all of these food delivery companies use their last mile chops to get into other lines of business, especially in India and Latin America. They're starting to deliver medicine and drugs. They're starting to deliver, like clothing, things you buy online, that kind of stuff. It's kind of like Amazon. Right. So you think of how retailing. So Walmart's big competitive advantage was logistics. Amazon's big competitive advantage was logistics. Like what's stopping Uber from becoming a e-commerce company that just like sells things like dark kitchens, dark groceries, dark commerce? I mean, or empowering that for other people. Like it's just, you use the Uber API and it's just like, I'm going to get things delivered with the Uber API. Postmates is already doing that. I think Uber experimented with it with Uber Rush. It's like if you already have the drivers on your network, people are leaving, they're not getting paid enough, whatever people want to complain about Uber and how they treat their drivers, giving them more to do, giving them more jobs. Like, hey, you can drive people around, you can deliver groceries, you can deliver furniture, you can deliver clothing, like from Taylor, I don't know, just I mean, Uber's kind of a staffing network. You press a button and you get a job. So helping people just do more with that is interesting. So I think, the Uber just has a lot going on. And if you also take what Uber's valued at, when you look at Yahoo Finance, it says it's like $40 billion today or something. I haven't checked. But there's also some cash on the balance sheet. You take out the cash. They have a bunch of losses. So they have some like tax loss carry forwards. It's probably worth something like $1 billion at this point. You also say that they own a certain percentage of Grab. They own a certain percentage of Yandex Taxi in Russia. Own a certain percentage of, don't they own part of Careem in the Middle East? They own part of Didi too in China. So they literally own a piece like every single ride-hailing business around the world. You basically give them credit for that and like back those out of Uber's value that you see that's trading for. It's trading for like, I don't know, 20 or 30 billion dollars. Like, that just seems really, really low for what they're doing. They're trading at like, when you really back all that out, they're trading at like 2 times revenue. And you need to make adjustments on the accounting side for how you treat certain costs, like whether they're like where in the income statement and when looking at cash flow where they actually fall. But I think Uber is more of a tech company and WeWork is more of a tech company than people give them credit for. And they shouldn't be trading at that low. Of a
What's the right framework for determining which something should be trading at? Like 2x versus 5x versus 10x?
It's kind of it's a function of how fast the revenue is growing and it's really a function of how fast your free cash flow is growing. So you really want to value business based on their cash flow, not on their revenue. But the reason people value on revenue is because there's no cash flow yet. But you assume that the cash flow is going to come. I mean,
and for the audience that may not be super financial, explain the difference between cash flow and revenue here.
So revenue is your sales. It's just the amount you collect at the end of the day from your customers that comes in. Cash flow is the amount of money that hits your bank account at the end of the year, like the increase of total cash that you have available to deploy and do things with. So, you can have revenue that comes in, you pay server bills to Google or Amazon, you pay all your marketing expenses, you pay salaries, you're paying your WeWork bill. At the end of the day, your bank account increased $5 for every, your bank account increased $25 for every $100 of revenue that you brought in. That's pretty good. You have a 25% cash flow margin, free cash flow margin, which is, that's impressive. Traditional non-tech businesses, it's not that high. And that's why we see tech companies trade at a higher multiple of their revenue, is because you see something like Facebook at scale. Facebook is probably like a great product. All their costs are fixed. Each additional scroll that you make in the feed, like all the advertisers just on auto pay. So it's literally, if you can just convince people to spend more time scrolling, it's literally like 99% margins for Facebook. So that's why these companies trade at such high multiples.
And you mentioned that because you come from the LP side, you think all product and business decisions ultimately come down to generating cash flow.
Yeah, really, that's how I think about it. And you can think of product as like, how will the user use this? How will it convert something to sales quicker? Like how will you increase your sales efficiency? How will someone fall in love with the product? How will you keep them coming back, creating network effects? Like really all that stuff just comes down to generating sales and generating cash flow, and every business is valued on cash flow. So that's just kind of how I approach investing, is I just think of like, how does this impact cash flow? And sometimes that's really hard because it's like, it's a startup. There's like 3 employees. Like they have a couple customers, but you have to think about, what will this look like in 10 years? And could the founder take it there? Does the founder know what way to go? How the market react to the product? Like there's so many different ways, and it's impossible to get it right, but that's kind of my framework that I use. Which I think is helpful.
And one thing you've thought much about is micromobility. We're talking about transportation. How do you think about the winners there as it relates to Uber, as it relates to, and I think, and that's one question. The other question is is Uber a wedge? And US tweeted the other day, is Rappi a wedge in Latin America into something bigger? And I think the challenge, that's the bull case. The bear case is maybe Amazon, Apple, or Google have a wedge into their business or
exactly.
something. And how do you think about that? Those few things.
So in terms of like bundling, you can think about that. So like Amazon Prime, you just pay for Amazon Prime and just buy everything from Amazon. It's just like a psyche thing. Uber's like an example. You get rewards, and you're getting, in some cases they're introducing like this Uber Pass where you pay Uber $25 a month. You get free micromobility rides. You get cheaper rides, you get cheaper food. Eventually, it'll include other things like financial services, buying insurance. I don't know which product's actually going to work, but it's kind of like Amazon where they'll give like, hey, free video streaming if you have Amazon Prime. Like Uber could, who knows, maybe Uber offers like a streaming service like, hey, free Netflix or Uber Flix if you pay for Uber Prime. I don't know if all those things that they'll do, but there's ways you can definitely bundle it. I mean, a lot of people have heard that kind of like meme, like everything's about bundling or unbundling and rebundling.
Yeah. I
mean, it's kind of like the car is getting unbundled, but Uber's rebundling things in a different way and repackaging it. And I think it's important for them in terms of getting cash flow. Like you have these captive users, they're riding using your app every day, they're eating food using your app every day. Like you've got them coming back, some people 2 to 10 times a day.
Yeah.
How do you take advantage of that as a company?
Right. Yeah.
If you have a captive audience, what else can you do to increase your cash flow? What kind of product decisions can you make?
And real quick, what's the framework for determining whether Uber will be used as a wedge into Amazon's business or Amazon will be used as a wedge into Uber's business? Like how does one determine who's more likely to, or even if you took different companies, but the example of a wedge into something versus wedge into the other thing?
Yeah, I think that's what startups are all about, just creating a wedge into a massive market.
Yeah.
So I just think strategically in thinking about the value that you create for customers, that you're capturing and kind of the value chain of an industry, how important is the piece that you're getting? So
how important, how defensible, how...
Yeah. And there's no right answer for that. I mean, it's super contextual and something that worked for one company could not work for the other. But I think it's just about critically thinking through and just like talking to people that are way smarter than you. Like that's pretty much my strategy for learning about things. I just like talk with and read from people that know more than me and are smarter than me. So that's kind of how I approach it. And I don't think there's a right or wrong way to do it. And it's hard. That's why so many startups fail and why some startups are worth tens of billions of dollars because no one really knows. Yeah.
Who wins in micromobility? Or how do you think about that how that space evolves?
Yeah. I mean, I think it will probably remain sort of. So I guess the way I think about it is
it winner take all? How does Uber get in that space?
Yeah, I mean, it's super regulated, so you have to compete at the local level, which is really hard to scale. You've got companies like Bird that are basically outsourcing that. They're like the Bird platform where they've got entrepreneurs that basically run a little mini business on using all of Bird's resources. You've got someone like Uber who can just say, hey, we'll give you free scooter rides, but also buy food from us and use our car, use our ride hailing. And then like you've got Lime is more of like you can use bikes and scooters, and they've talked about introducing little like 2-seater pod things eventually. There's so many different ways that people are kind of attacking the problem, and there's tons of startups that are sort of trying to do different takes on it. So I don't know. I mean, it's a very operationally complex business that you can't just copy and paste some code and just hope it works. You have to hire people who are experts, boots on the ground. Cities want to regulate these things. They probably over-regulated them. So I think maybe we'll see like cities, someone has a monopoly in a city, or we'll see some cities where like there's multiple players. But I don't think we probably won't see like Uber where it's literally just Uber and Lyft. Probably a little more fragmented. Maybe the margins are lower. I don't know.
And is self-driving cars winner take all over time?
I'm just betting self-driving cars would never happen because they've been like 3 years away for like a decade. I make none of my investments that I'm making or like the way I'm thinking about the world is assuming that we'll get self-driving cars. I know it'll happen.
Right.
I maybe more bet of if self-driving cars happen, who has the distribution? Like Uber already has 100 million people using ride hail. I don't know what the number is, but could Uber just roll out the fleet and start saving money, or is it more play to Waymo and Tesla? Honestly, I don't know.
Right.
I guess we'll probably see autonomous in the enterprise side, like in trucking, maybe like teleops
and
see first.
What about ride sharing? Do you think Uber and Lyft continue to?
I mean, I think it's profitable business. They're just scaling really quickly, and the core product works. It's just they've been growing really fast. Like that's something going back to our WeWork conversation. If you read through all WeWork stuff, something like at the time they filed the S1, I think they had 522 locations, and they had this little graphic that showed 10% of the locations were mature, and 90% of locations were under construction, just finished, leasing up at like 20% occupancy, 50% occupancy. So you have like 10% of your product is generating like significant revenue, like at scale, and 90% there's tons of expenses and there's no revenue coming in.
Right.
And you look at something like Uber Eats went from 0 to 600 locations in like 2 years, and it just jacked up all the financial statements. Like you can't tell looking at the macro, no differentiation between the two. You can kind of drill down and like see, they kind of break out how they're giving incentives to drivers to drive and riders. It's like pretty competitive. There'll be some shakeout a little bit, but it's a business. Like it works. There's a reason that they raised so much money and that everyone tried to compete, because there's money to be made. I've
heard, the ride sharing is one example, but I've heard the critique of sort of Peter Thiel's monopoly thesis basically be that most industries don't end up having monopolies. They end up having like oligopolies or 3 or 4 major players in the space. It's interesting too.
Yeah, I mean, you just get regularly like that's what we're kind of seeing with something like Google, like Amazon, like Facebook. There's the perception of its monopoly. It's great for a talking point if you're running for office, because it's a super complex thing. If people don't understand, it was a great talking point. Right. You can just throw out some stats and it's like, oh yeah, Amazon, we hate Amazon, like vote for me. That's all it comes down to. Or we hate Amazon, read our article because we need ad revenue, like click on our thing. And everyone's scrolling the feed, nobody's clicking the article. So let's say some crazy stuff to get people to click and get our revenue back up. Totally. I mean, it's, I don't know.
Let's shift a little bit to consumer social.
Okay.
So, I want to hear where you're really excited about consumer social right now. Like what you tweeted about this, a bunch of people responded, and you're thinking about it. I know you have gone deep on TikTok, you've gone deep on Snap. We'll get into those, but is there anything new that you're seeing right now or want to be seeing, have a request for startups and consumer social? Like what's really exciting to you about consumer social right now?
Yeah, I think the exciting thing about consumer social is just the best ideas come out of nowhere and no one's thinking about them.
Yeah.
I mean, like you look at Snapchat, it's like send a picture instead of a text and it disappears. Like what the heck? Who would want that? But people did, and it ended up being really convenient because, a picture says 1,000 words. I can send someone a snap of us right now and they're like, oh shoot, like I know exactly what he's doing. Versus if I want to tell someone texting now, it's like, I'm here, I'm at a WeWork, I'm with Erik recording a podcast, here's all the stuff that's going on. It's like, it's so much quicker, more efficient. And it's something that just kind of came out of nowhere. I think you have to think about your business model. Like, am I going to sell ads? Am I going to do subscription? That kind of ties into if you do anonymous, if you do group chats, if you're doing like a broadcast thing. One of the things I think is really interesting right now about consumer social, it's not really social, but like TikTok, it's not a social product. There's no friend graph. Yeah. It's like a content graph. And when you really think about what Facebook and Instagram has become for a lot of people who are early adopters of social products, it's just a content consumption broadcast mechanism. You open Instagram and see sort of what some of your friends are doing, but there's also tons of influencers. You're following brands. You're getting news. It's kind of like Twitter. A lot of people, the average person uses Twitter just for news. So there's not really even a social graph here. The social graph is just interesting because it's a way to basically bring other people back in the app. Like send them a notification, ping them, get them to open it up, fall back in the feed and read some stuff and sell some ads. So it just depends on your business model and kind of how you approach that. I think there's people doing interesting things in, like Snapchat is doing really interesting things in AR and mapping. Yeah. Their kind of thing is, we're going to be computing overlaid over the world. We've kind of seen how that's played out. I think they did it projected to about $1 billion of their revenue is from AR lenses.
Wow.
And that's like legitimate. The revenue comes from augmented reality. Like Pokemon Go is AR and they're doing a lot of revenue, but it's like sponsored locations.
Yeah.
Which is kind of like Google Maps. Like you're buying ads tied down to a place in the real world, but it's not like a graphic that's overlaid over your screen, which is what Snapchat has done. It's pretty incredible. They created this business model around something that didn't exist yet.
Yeah.
So that's where I think the truly transformational social companies will come from, doing something that's just totally unique, no one's done yet. HQ Trivia, really interesting example. Just it's a classic component from TV, like a game show, but everyone can participate.
Yeah.
And it was fascinating. It took the world by storm. I mean, they had concurrently like over 1 million people watching and playing. Like that's amazing. And there's going to be other products that come out of nowhere that there's just like a really special thing, and you can kind of tell when you play with it. It's like, wow, this is just new and unique.
Totally.
And they just keep happening.
Yeah.
And, YOLO, perfect example, literally came out of nowhere. It's like anonymous questions. It's like, why would anyone want to do this? But it's like dominating the app store.
Right. Well, they keep coming. The question is, what's their staying power, right?
Yep.
You have Meerkat and Periscope, but also House Party, and then HQ Trivia. What's its staying power? And then like even YOLO TBD. But you're bullish on Snap.
Yeah, I'm incredibly bullish.
You put your IRA in Snap. You think that
my whole IRA in Snap right
you
now.
think that the camera first is really powerful, and you think that Snap maybe even has a better business model than Facebook, or a rival or a business model that rivals Facebook. Talk about why you're so bullish on Snap, what the bull case is, right? Yeah.
So I think if you step back and you look at Snap, how it works, the product is everyone talks about how group chats are great for engagement in social, because you send a message and 10 people see it, and probably 9 or 10 people open your app and get back into the experience. But group chats have kind of a negative connotation. Like, I won't check it for a while. I'll just check it in like a day, or maybe I just don't even pay attention to my group chats anymore because it's so noisy. Snapchat is the same thing. You take a picture, you send it to someone, but you also send it to like 10 other people. And for everyone who receives it, it's a one-on-one message.
Right.
So they're more likely to open the app and do the same thing and send it to other people. So you've kind of got this proliferating network effect that compounds on itself, which is like people sending messages. And that's why they survived the Instagram onslaught, because a lot of people just use Snapchat as a broadcast tool, seeing stories from influencers, celebrities, Justin Kahn talking on Snapchat stories, like VCs use it. And like Instagram, that's what you use Instagram for. And that's why stories work so well, was because you opened it up, you just saw content from interesting things, and they play stories right at the top of the feed.
Yep.
So you're going to see it and you're going to click on it. And if you're a celebrity, they had tens of millions of followers on Instagram, instant distribution. I mean, distribution to some extent like can trump product depending on the scale of everything and how good the product is. And Snapchat just like didn't really care about celebrities, because they knew that their core focus was on friends, one-to-one, making people feel special, communicating with people that were really close to you versus watching Kylie Jenner, whatever she's doing, watching your favorite athlete. And we're seeing now TikTok is just provided, you could say, a better consumption vehicle than Instagram, because on Instagram you see things that basically you follow and you've chosen to follow. So Instagram can't just go, oh, you should really check out this thing that Erik Torenberg posted because it's great. It's like really funny sketch that he just did, a funny video, or like a great podcast video as a clip from it. But Instagram can't show you that in the feed because it relies on what you follow. Whereas TikTok is just like, we do not care who you are, who you're friends with, what your friends do. It's just, we know you'll like this.
Right. Sure, like YouTube.
Just like back to back. Yeah, just like YouTube.
Yeah.
So I think Facebook is kind of hampered by having to rely on this friend thing and who you follow. And it's still a great product, but they just haven't been able to compete with TikTok. And they're tied down to the feed. Like, that's where most of their revenue comes from. And you're seeing they've been trying to transition to stories, full screen video, which is literally TikTok, just full screen video. They've had trouble making the transition because they have to get advertisers ramped up and start buying stories ads. So they've been hampered by being relied on the feed. They have like feed that basically on both Facebook, because Instagram was a great acquisition, all the stuff on the user side, whatever. Yeah. But they literally just copy and pasted the code from the Facebook feed and just put it in Instagram. It took them, I think, like a couple weeks. Like, it took a team of engineers like a month to get it up and running, because it's literally the same product. Yeah. And you're tapping into the existing advertiser network. So users are big, but you also need advertisers, and that's one thing where Snap struggled. They have to get all the advertisers on board. So does TikTok. Yeah. So kind of getting into this then now too with TikTok, all this crazy marketing spend we're seeing them doing. Like, it's about acquiring users. It's all about just acquiring hype and like getting marketers interested in trying it out. Yeah. Because we've seen with Facebook, their hype strategy was, hey, person who runs ads in the US, we have 2.8 billion users around the world, come advertise on our product. Right. And some marketers will think, oh, wow, I can reach 2.8 billion customers on Facebook. No, you can't. You can reach probably, like, your customers are probably all in the US, they're all in the UK, they're all in Australia. All the users that you're never going to reach in places in Africa, the Middle East, like, most people aren't trying to reach customers there. But great marketing tactic, because as an advertiser, you're like, oh, 2.8 billion people, like, this is the best way to advertise.
And TikTok is kind of crazy. I mean, because it's what Vine should have been or could have been.
Yeah, it really is.
But it's crazy that, Facebook, Instagram, Snap, Twitter, YouTube, I don't know, all the existing social
Even
platforms.
Snap. Like Snap hasn't copied it.
Yeah, didn't figure it out or didn't do it first.
It's because it's just a different UI. Like it's an entirely different experience. Even YouTube has had trouble. Like if YouTube's try to do stories, like they can't. It's long form video. So TikTok, it's short form, bite-sized video. And I think we'll see them go from, and we've kind of already seen it. They started with just dancing, lip syncing. Yeah. They've started layering in comedy, how-tos.
Yeah.
They'll start layering in other forms of content, get a little bit longer. Now they've announced a music streaming thing, which has been in the pipeline for a while.
Wow.
But literally with TikTok, we use it as TikTok is basically just memes, like video memes, and that's huge for most people under a certain age. Like,
does it eclipse YouTube or start to get in
if I would have to bet on someone beating YouTube, like the next YouTube, it would probably be TikTok because YouTube is the same thing. It just shows you videos you want to see, but they're all horizontal by default. They're all long form. Whereas TikTok is like, if that video isn't good, you just scroll, watch the next one, and you find out in 15 seconds what it was, and you just watch the next one, and they'll start layering on other things, and they have to, and I think they're going to try to become YouTube, and that's why we've seen Google try to talked about acquiring Firework, which is like a TikTok competitor. Facebook is trying to launch a TikTok competitor, so like it's a really interesting UI that it's kind of like the feed is different, stories is different. A video first UI is just a different DNA for the company.
If we're here a decade from now, back on another podcast, we'll do one sooner, obviously. And we're sort of reflecting on how the consumer social landscape has changed.
Yeah.
What do we think happened? Is there anyone we're bearish on of the big players? Is there anyone that we think Snap is going to replace Facebook's status or something? Like what's sort of how do we think things could shake out?
Yeah, I think the most used social product is Bitmoji.
Wow.
That's my call, yeah.
So say more about that. Why?
Yeah, I mean, if you really think about Bitmoji, it's kind of like a digital representation of yourself. And that's what that's what a lot of consumer social is. It's about digitally, especially when you're targeting younger folks, like the digital version of yourself just through a feed.
Yeah, I do see digital avatar startups. Is that what you're talking about? But Bitmoji being the incumbent there and likely winning?
Bitmoji, so with the Snapchat redesign, they ruined the app, 2% of the users left. But with the redesign, they rolled out Bitmoji across the entire app. And if you check the App Store downloads from right around the redesign, it was the #1 most downloaded app in the US, all these big markets for like 3 weeks, because literally every single Snapchat user downloaded Bitmoji because they made it uncool if you didn't have a Bitmoji. So everyone got one. Yeah. And Bitmoji is basically, it's like a decentralized social network. That's how I see Bitmoji, because it's a backdoor into all these other apps via the keyboard. You can use your Bitmoji in Facebook Messenger and in Twitter. Like I post like my Bitmoji like pictures into my Twitter feed sometimes to respond to people. But then you've got SnapKit, which is basically Snap's developer platform. And they're kind of like, hey, you're creating a social app, YOLO, use it. It's anonymous questions. Like, hey, make your conversion rates higher on new users, because they don't have to upload a avatar. They probably don't have a Facebook profile. We're not going to collect any data in a negative way. We're just going to say, hey, their avatar can be their Bitmoji. It's an anonymous avatar, like a digital avatar, which other people are trying to create. And Snap is letting them have that be a component. I don't know. That's my bet decade from here. I mean, who knows if Snapchat's still around? Who knows if Instagram's still around? I think Bitmoji, everyone's going to have one. It's a perfect leeway into AR social, into VR social.
But Snap owns Bitmoji, right?
Yeah, they own Bitmoji.
So Snap is if the product is, the product won't be around, but if Bitmoji's big, Snap, the company, will have done very well.
Yeah, I mean, I think eventually, like the Snapchat app will be different in 10 years. It might be all in our glasses. Who knows? And that's the thing, like AR glasses, everyone's been talking about them. We'll get there eventually. Who knows when it happens? But Snap is basically laying the foundations for building an AR ecosystem and like a developer ecosystem of like AR lenses are basically just AR apps.
Like, so Snap's just waiting for the next platform.
Yeah, Snap is getting ready for the next platform. And whether they take an Android approach where they're like, hey, use our Snap OS to power your glasses, or whether they take an Apple approach where they say, we're going to own the hardware and we're going to own the whole like walled garden software. I don't know what they'll do.
Or for a Twitter conversation, do they take the Apple approach that they make superior products, and or do they take the WeChat approach and layer all different types of, financial products, insurance, other things that they're cross-selling to Gen Z?
I don't see Snap doing that.
Maybe because it's not their DNA.
Maybe if there's like a different CEO. Evan's gone, they like totally changed the DNA, but I think the whole DNA of the company is just your friends. I mean, I think that's really, it's a defensible product. Like we've seen Facebook should have destroyed Snap. Like and everyone thought that like Snapchat's done. Like even if you look at their financials, their hosting costs went up after the redesign. And why did your hosting costs come up? Because people use your product more. Yeah. So even though like a couple of users kind of dropped off, like the core people who are power Snapchat users who use it for everything,
they're not leaving.
Yeah, they're there forever. And when Snap rolls out glasses, who's gonna be the first person to buy cool AR glasses? It'll probably be like tech nerds like you and me, sure, but grandma's not gonna buy it. Like our dads won't buy it. It will be the 16-year-old kid who kind of uses it for gaming, for social. That's literally what Snapchat's for. Yeah, we've seen them launch their gaming product. Like they're just building so many components of this next platform, and they're building tools for other people to build companies on Snapchat and SnapKit. You're seeing they have AdKit where you can generate revenue from Facebook's from Snapchat's advertising network. Yep. You're seeing you can use SnapKit to acquire users faster and grow your business faster. Like YOLO, like it exploded. They have, I think, they have like, I don't even know what the number is. It's like 11 or 19 of the top 100 apps on the App Store have SnapKit integrated. It's like they already have their tentacles kind of everywhere, and tentacles is like a negative word, but like you mean it possibly, and Bitmoji is such a powerful thing. It's kind of taking what Snapchat has done and just digitizing, animating it, and it's kind of like the login with Facebook. It's your profile picture for the digital world. Totally.
My guest today has been Turner Novak. Turner, it's been awesome having you on the podcast. Thank you so much for coming.
Yeah, thank you. Thanks for having me.
If you're an early stage entrepreneur, we'd love to hear from you. Please hit us up at villageglobal.vc/network catalyst.